Hello friends, I Kamakshi Khandelwal welcome you all to my next webinar. Today I would be discussing about the changes proposed in indirect taxes in Union Budget 2018, which was presented by the Honorable Finance Minister Mr. Arun Jaitley on 1st of February 2018. The Honorable Finance Minister mentioned in his speech that the agenda for this budget would be primarily agriculture and rural economy. The main focus would be on strengthening the agriculture and rural economy by providing various measures like launching the Operation Greens, also providing measures like free electricity and LPG connection to the poor and the like, provision of health care to the economically less privileged, relief to the senior citizens, creating infrastructure and working with the states to provide resources to improve the quality of education in the country. The Finance Minister also envisaged on minimum governance and maximum transparency in all the measures. Now, coming over to the indirect tax proposals. On the indirect taxes side, excise duties to a large extent and service tax have been subsumed in GST along with the corresponding import duties like CAD, SAD, etc. Thus, the budget proposals are mainly on the customs side. So let us start discussing these changes one by one. Coming over to the first set, the legislative changes in customs. The scope and applicability of the Customs Act has been expanded to offences or contraventions committed outside India by any person. Consequently, definition of Indian customs water is also proposed to be amended to extend the limit of Indian customs water into the sea from the existing contiguous zone of India, that is up to 24 nautical miles, to the exclusive economic zone of India, that is up to 200 nautical miles. Thus, the power to search, arrest, seizure has been expanded. Definition of the term assessment has been expanded significantly to include factors such as classification, valuation, exemption or concession, quantity, weight, volume, measurement and any other specific factor which impact the computation of customs duty. Next, Section 11 is being proposed to be amended to provide that any prohibition or restriction on imports or exports of goods under any other act will not be effective unless such prohibition or restriction have been notified under the Customs Act. For example, there is restriction on the importation of rice under the Foreign Trade Development and Regulation Act. So, this prohibition would not be applicable if it is not notified in the Customs Act. So, it is very important that any prohibition or restriction which is provided under any other act like the Foreign Trade Development and Regulation Act, it has to be notified in the customs as well to be operational. Next is the section 17 and 18 for the self-assessment and the provisional assessment. The scope of verification has been expanded beyond self-assessment to all the entries made under section 46, that is the assessment for import of goods, or section 50, assessment of export of goods. Verification of self-assessed imported goods shall be based on a risk-based selection criteria. Scope of reassessment has been extended by omitting specific reference to valuation, classification and exemption or concessions of the duty availed. This implies that reassessment can also be done if there is any mismatch in the inputs entered in the bill of entry, etc. Amendment is being proposed to empower the board to issue regulations for providing time limit for submission of documents and for the proper officer to finalize provisional assessment. Next, two new sections, section 25A and 25B, are proposed to being inserted to provide that no customs duty shall be levied on goods imported or re-imported for the purpose of repair, further processing or manufacture, subject to the satisfaction of certain conditions specified therein. Next is section 28, which is recovery of duties not levied or not paid or erroneously refunded. The following changes have been proposed in this section. It would be mandatory to hold pre-notice consultation in cases not involving collusion, suppression, etc. before the issuance of demand notice. Provisions for issuing a supplementary show cause notice in the circumstances and manner as may be provided by the regulations is also being proposed. The adjudication of demand notices to be completed within the prescribed timelines. 6 months for notice issued under normal cases, that is, the cases not involving any fraud, suppression, etc. and 1 year for cases involving collusion, willful misstatement, suppression, etc. It is a very good move by the government. Earlier, the government took too long to even adjudicate the show cause notices. So, by this amendment, it would be mandatory for the government officials to adjudicate the show cause notice within the prescribed time frame. This time limit is further extendable up to 6 months in normal cases and 1 year in cases involving fraud, suppression, etc., subject to the approval from the higher authorities. Next is the proceedings shall be deemed to be concluded if adjudication is not completed within such extended period. Now coming over to the changes proposed in advance ruling. The definition of advance ruling is being expanded to cover subjects beyond mere determination of duty. Now advance ruling can be obtained in respect of taxes apart from duties under the Customs Act or under any other law for the time being in force. Definition of the term applicant is being amended in order to make it broad-based. According to the revised definition, a holder of valid IEC number or the exporter of goods to India or any other person with justifiable cause can apply to the advance authority. Time limit for pronouncement of advance ruling has been reduced from 6 months to 3 months. The existing advance ruling authority that is constituted under the Income Tax Act will now be designated as Appellate Authority for Customs Advance Ruling and a new authority to be called the Customs Authority for Advance Ruling would be constituted. Customs Authority or applicant can now file appeal against the pronounced advance ruling within 60 days, which is further extendable to another 30 days from the date of communication of ruling. Applicant for advance ruling can also be represented by a duly authorized person who is a resident in India. Now, there are certain other miscellaneous changes being proposed in the Customs Act to bring it in line with the Trade Facilitation Agreement or the GST Act. First, presentation of bill of entry or shipping bill or bill of export can now also be made through customs automated system for import and export of goods. A new chapter, Chapter 7A on payments through electronic cash ledger has been inserted to have a provision for advance deposit, which would enable the payment of customs duty, interest, taxes, fee and penalty through electronic cash ledger instead of the current transaction-wise payment. This is in accordance with the payment procedure as envisaged under the GST Act. Audit provisions have been introduced under the Customs Act. By inserting a new chapter 12A, it seeks to provide for audit of imported or export goods and of oddity under the Customs Act in accordance with the procedure to be provided by regulation. A new section 151B is being inserted regarding the reciprocal arrangement for exchange of information between India and any other country in connection with specified customs matter like effective risk analysis, combating and investigation of offences under the provisions of this Act or under the corresponding laws in force in that country. Next, a new section 143AA is inserted to empower the board to take such measures or prescribe a separate procedure or documentation for a class of importers or exporters or for categories of goods or on the basis of the mode of transport of goods for the purpose of facilitation of trade and maintain balance between customs control and facilitation of legitimate trade. Changes have also been prescribed in section 153, that is the mode of service of notice, order, etc. This section is being substituted so as to align it with the provisions of section 169 of the CGST Act to include speed post, courier and registered email as valid modes of delivery, and in case of non-service by such means, to also provide for affixing it at some conspicuous place at the last known place of business or residence, in addition to affixing it on the notice board of the Customs House. Now, there are certain changes being proposed in the Customs Tariff Act. Section 3 subsection 7 and 3 subsection 9 of the Customs Tariff Act are being amended to provide for the manner of computation of IGST Act and compensation cess respectively in case the goods are sold directly from the customs warehouse. So what is the method of computation? IGST or compensation cess to be paid on higher of transaction value under section 14 of the Customs Act or the value determined under the new subsection 8. In case of multiple transactions, that is where the goods are being sold to multiple customers by transfer of document of title of goods, the value of last transaction to be taken as the transaction value. For example, if X imported goods valued at Rs 100 and subsequently sells the same at Rs 500 to Y, while the goods are still lying in the customs bonded warehouse, then IGST under the Customs Tariff Act as per the newly introduced subsection shall be payable on Rs 500 while filing the X bond bill of entry by Y. Now, coming over to the customs tariff changes. In order to incentivize the domestic value addition and make in India on certain sectors like food processing, auto components, furniture, footwear, customs duty has been increased on certain items. EC and SHEC on imported goods have been abolished. A new duty of customs called the Social Welfare Surcharge is being levied on all imported goods. This has been introduced with the objective of financing health, education and social security. This levy will come into immediate effect, that is from 2nd February 2018. This levy will be calculated on BCD portion only. Social welfare surcharge on IGST and compensation cess payable at the time of import has been exempted. Social welfare surcharge shall be levied at the following rates. Nil rate for goods which are hithartho exempt from payment of education cess and secondary and higher education cess. 3% social welfare surcharge for certain specified goods such as silver, gold, motor spirit, etc. and 10% for the remaining goods. A new road and infrastructure cess has been introduced. This will be levied as an additional duty of customs on import of motor spirit, commonly known as petrol, and diesel at the rate of 8 per litre. This levy will also come into immediate effect, that is from 2nd February 2018. Additional duty of customs levied on import of motor spirit, that is petrol and diesel, has been abolished. These are some of the products on which the customs duty has been increased substantially, like the custom duty on cellular mobile phones has increased from 15% to 20%. On footwear, from 10% to 20%, on imitation jewelry from 15% to 20%, fruit juices and vegetable juices including cranberry juice from 30% to 50%, a 20% increase, perfumes and toilet waters from 10% to 20%, beauty or makeup preparations again 10% to 20%, truck and bus radial tires from 10% to 15%, smart watches, wearable devices from 10% to 20%, toys and games from 10% to 20%. All these products are somewhere related to the common man. So, if these are imported, there is a huge increase in the import duty which has to be suffered by the end consumer. Now, there are certain amendments being prescribed in the second schedule of the Customs Tariff Act, that is export duty. Electrodes of a kind used for furnaces will be subject to an export duty of 20%. However, the effective rate of duty is nil. Nil rate of duty in respect of all other goods which are not covered under column 2 of the second schedule is being prescribed. Now, coming over to the changes prescribed in the central excise duty. Levy of road and infrastructure cess on motor spirit, commonly known as petrol, and high-speed diesel oil is being introduced at the rate of Rs 8 per litre, and in case of petrol and diesel manufactured in and cleared from 4 specified refineries located in the northeast, the rate of road and infrastructure cess shall be Rs 4 per litre. The additional duties of excise on petrol and high-speed diesel oil has been abolished from Rs 6 per litre. There is a rationalization of basic excise duty on petrol and diesel. The basic excise duty on petrol and diesel has been reduced by Rs 2 per litre. Next, road and infrastructure cess has been exempted on 5% ethanol blended petrol, 10% ethanol blended petrol and biodiesel up to 20% by volume, subject to the condition that appropriate excise duties have been paid on petrol or diesel and appropriate GST has been paid on ethanol or biodiesel used for making such blends. Next, coming over to the changes prescribed in service tax. Following retrospective exemptions are being introduced. First, services provided or agreed to be provided by the Naval Group Insurance Fund by the way of life insurance to personnel of Coast Guard under the Group Insurance Scheme of the Central Government. It has been exempted from 10 September 2004 to 30th June 2017. Second, services provided or agreed to be provided by the GSTN to the central government or the state government or union territories administration. The period involved is 28 March 2013 to 30th June 2017. Third, consideration paid to the government in the form of government's share of profit petroleum in respect of services provided or agreed to be provided by the government by way of a grant of license or lease to explore or mine petroleum crude or natural gas or both. And the period of exemption is from 1st April 2016 to 30th June 2017. This finishes up with all the major changes proposed in indirect taxes in the Union Budget 2018. I hope you all found it useful. In case if you have any queries, you can email me the same at my mail ID. You can also subscribe to my YouTube channel CA Kamakshi Khandelwal for more videos on GST and indirect taxes. Thank you. Have a nice day.